IndiGrid is in focus after the Q2 numbers, with revenue driven by the two project acquisitions last quarter. Shah, who's the managing director of IndiGrid, joins us to talk more about the numbers. Harsh, always a pleasure to welcome you on NDTV Profit.
Same here.
Thank you. And how do you see the retail APE growing in the second half, given the GST revision that we have seen, Harsh?
So I think retail participation in terms of the investment has gone substantially up. Today we have sizable amount of increase in participation of retail shareholders in the books. I think if I look at since listing and now, there's at least 20-fold increase. And we are seeing at least over 50,000 unit holders today that is invested in IndiGrid. And across InvITs and REITs, if I count, it'll cross 2 lakh investors. So it's a sizable amount of increase that we've seen in retail participation.
Also, Harsh, the solar collections have dropped to 89% versus the earlier 117% YoY. Is this a one-off, or do you expect this to be normalized going forward?
It is very normalized right now. You can't have more than 100% collection, right? So last quarter was where people have paid excess, so this quarter is less. So you need the right number to look at. It's DSO, days sales outstanding, and that's in the range of 50 days, which is phenomenal for this sector. And over the last decade, this is the best time that we have seen where receivable cycles are very short and very predictable.
Right. And what about the 187 million rupees to reserves this quarter that have been added? What is the strategy behind maintaining this NDCF reserve?
So our goal is to ensure that unit holders get predictable DPU and growth. There are always quarter-on-quarter movement with respect to generation, with respect to collection, variety of things take place. So in some quarters we collect cash, in some quarter we have to use it. But investors receive a predictable, stable distribution yield is a focus. As we speak today, we are carrying about a quarter or two of extra distribution reserve with us, which will be around 6 rupees equivalent, around 500 to 600 crores, which is nothing but, I would say, cushion for us for any volatility comes in the market or collections or business. Unit holders will not have to worry about it because they'll continue to, they have this buffer available with them for any time receiving the distribution. We can also reinvest that in new projects and grow, that we're already doing it. So it allows us to balance the business and grow.
Right. And also, Harsh, now the Q2 revenue has grown just 2.6% when we compare it to the same period last year, while EBITDA dipped 1.1%. How do you see the growth picking up in H2? Also, the investors would like to know the path ahead.
Yeah. So we are not in the business where we go quarter on quarter. We grow when we acquire assets as well as we finish our development assets. So I think the revenue growth that you've seen is down on account of two reasons. One, we acquired few assets last year, but we'll see their full impact in this financial year. Second, we had a accident, or rather I would say a breakdown in one of the turbines in solar thermal project, and that's where we had a little bit of loss of revenue, which is covered by insurance, but that's something which reduced revenue and also had impact on EBITDA. And the third is we had a regulated tariff mechanism project where we had a true-up of tariff that took place, which was factored in the budget and acquisition value. But that's a one-quarter impact that we see. So to me, it's a transient impact that will go away. Going forward, we are executing almost 6,000 crores of projects in the pipeline. So over the next 2 years, as those projects come into line, we'll see predictable growth in revenue, EBITDA, as well as NDCF.
Also, your DPU, Harsh, has risen by about 6.7% to 4 rupees. What is now the guidance for the second half? Is this sustainable? What are we expecting for FY27 also?
Sure. So our strategy has been to increase DPU year on year. And as we acquire projects and grow, we increase DPU. We have done that over the last 10 years successfully, and we plan to do it longer period. The 4 rupees when we increased earlier this year as a run rate for FY26 is well on track. So we will hopefully finish the year with the same 16 rupees annual that we have guided the unit holders for. The growth for next year depends on how we acquire assets or how many projects we win. That's something which we have done a ritual of every year. We come and decide of the assets we acquired, how much extra NDCF we have created, and then we guide for the next year. But 4 rupees when we went to a 4 rupees a quarter or 16 rupees a year, it is for foreseeable future will continue. So the decision in FY27 is going to be whether we are going to increase 4 rupees to a next number or not whether 4 rupees will be there or not. So 4 rupees will continue to happen in FY27 as well.
Right, so 4 rupees will continue in FY27 as well. Harsh, always a pleasure speaking to you. Thanks so much for joining us on NDTV Profit.
Thank you.